Hey everyone, welcome back to the channel. Today we have a huge topic to dive into that might change the way you think about money, banking, and personal privacy. Trust me, you're not going to want to miss this one. Imagine a world where money isn't just something you carry around in your wallet or store in your bank account. Now, it could be something that's easily accessed, transferred, and even taken from your bank account in the blink of an eye, and not just by you. Yes, you heard that right. Today, we're talking about a growing trend that's making waves, new powers that could allow governments, companies, or even unknown parties to take money directly from your bank account. Scary, right? Let's break it all down. So, we've all been following the rise of digital payments, right? Gone are the days when cash was king. Now we've got everything from Venmo, PayPal, and Apple Pay, to more complicated crypto transactions and even centralized digital currencies like the e-dollar. But there's something creeping up behind the scenes that might just redefine everything we know about how our money is handled. And that is exactly what we're going to get into today. Now, before we get too deep into the subject, let's take a quick step back. Over the last decade, digital payment systems have become increasingly integrated into our daily lives. Whether you're ordering food delivery, booking a hotel room, or paying for groceries, we are shifting towards a cashless society. And there's a reason for that. Think about it. Digital money is faster, more convenient, and in many cases, safer than carrying cash. You can transfer funds in seconds with the tap of a screen. It's incredibly efficient. But just like any innovation, there are always trade-offs. As more people and businesses get comfortable with cashless transactions, the boundaries of what's considered safe and secure begin to blur. We're seeing government agencies, banks, and tech companies move toward more centralized control over financial systems. Take, for instance, the introduction of central bank digital currencies, or CBDCs. These are digital currencies issued and controlled by governments instead of private banks. The promise of CBDCs is to make monetary transactions easier, reduce crime, and increase financial inclusion. But the downside? Governments have complete control over your digital money. Now, let's get to the juicy stuff. You've probably heard whispers or seen headlines about something called direct account debits or even worse, automatic government access to personal funds. In simple terms, this could give governments or other institutions the ability to take money directly from your bank account. And it could happen without your explicit consent. So, how does this work? And what kind of powers are we talking about? Well, it's not as outlandish as it sounds. In fact, this is already happening in some countries. For example, governments have been passing new legislation and financial regulations that allow them to take direct actions on people's bank accounts in times of emergencies or crises. In the US, there are already laws like the bank levy that allow creditors to seize funds from accounts. But what we're seeing now is a step further, with proposals that could let governments directly access individuals' accounts without needing a court order. Some of these laws have been put forward under the guise of helping with national security, emergency preparedness, or even tax collection. However, in some cases, it might not just be a government that could get this kind of access. We've also seen financial institutions working with regulators to implement automatic payment systems for things like unpaid loans, taxes, or even to enforce penalties for certain types of behavior. But why would they want this? Why give government or companies the ability to pull money from your account whenever they want? Well, the reasoning might be more complicated than you think. One argument is that this could help stabilize the economy. Imagine a national crisis like an economic downturn or a global pandemic where millions of people might struggle to pay off debts or their mortgages. The government could step in and provide automatic deductions to help cover those costs without having to go through the long process of paperwork and permissions. And in some cases, this could even extend to ensuring people pay off things like child support or taxes more efficiently. But the question remains, where do you draw the line? When does helping the economy cross over into overreach? Another big driver behind this is the increasing power of digital currencies. When a government can create a fully digital dollar or euro, they have complete control over how money moves in and out of circulation. They can monitor transactions in real time, flag suspicious activity, and potentially, depending on the system's design, even withdraw money directly from accounts to fund certain initiatives or programs. This new form of currency could become an incredibly powerful tool for central banks, not only enabling them to control the money supply more effectively but also tracking and tracing every transaction. It's not a conspiracy theory. We are already seeing governments introduce bills and frameworks that set the stage for this. And it's just a matter of time before they have the technical capability to control your money to a much more granular level than ever before. Now, let's talk about the fine line here. On one hand, direct access to your account could make things easier and faster. It could automate payments, ensure you're never late on bills, or even make sure you're contributing to national emergency funds during tough times. But let's not ignore the elephant in the room. This kind of power could also be abused. With that much control over your finances, who's to say that the system couldn't be used to penalize individuals who don't comply with certain regulations? Or what if political or social unrest leads to mass deductions from people's accounts in the name of public welfare? These are real concerns that need to be addressed as digital financial systems become more powerful. One of the scariest ideas about this is the potential for forced payments. Imagine this: you're simply going about your day when suddenly a company or a government body takes money directly from your bank account for reasons you didn't agree to. Whether it's a fine, tax, or a new government-mandated fee, the money just disappears. No warning. No consent. It sounds extreme, right? But with the right legal framework in place, this could very well become a reality. And in some countries, there's already talk of implementing smart contracts in the digital finance ecosystem, where payments and deductions are automated based on pre-programmed rules. And it's not just the money part that's concerning. There's the privacy issue as well. The more involved governments and corporations get in controlling how and when money is taken, the more access they have to your personal financial data. We already live in an age where everything is tracked, from our purchases to our online activity. Adding bank account surveillance to the mix could give authorities unprecedented power to monitor our spending habits, the companies we deal with, and even where we go. With the push for more digital currencies and systems, the data that flows through these accounts could be used for more than just financial tracking. It could lead to full-fledged mass surveillance, and once that door is opened, it may be difficult to close. Now, it's not all doom and gloom. There are ways we can protect ourselves and advocate for better systems in the future. The first step is awareness. Understanding how these systems work and what they mean for your personal financial autonomy is crucial. You might be wondering, what can I do about this? Well, the truth is, it starts with awareness and understanding your rights. If you live in a country where digital currencies or automatic account deductions are being considered, it's important to be vocal about your concerns. Advocate for transparency in how these systems are designed, and push for stronger privacy protections. So, the big question is, are we ready for this kind of power to be in the hands of governments and corporations? The answer isn't easy. On one hand, we could see more streamlined payments, easier transactions, and even financial inclusion for people who might otherwise be excluded from the traditional banking system. But on the other hand, we risk losing control over our own money, our privacy, and potentially, our freedom. It's up to us to stay informed, to question these changes, and to demand better protections before things go too far. We need to make sure that in our quest for convenience, we don't give up too much of what makes us independent. Alright, folks, that's it for today's video. Let me know what you think in the comments. Are you worried about the new powers to take money directly from your account, or do you think it's just a necessary step for the future of finance? And, as always, if you found this video interesting, don't forget to like, subscribe, and ring that bell for more updates. Until next time, take care, and stay safe.